I'm not gonna lie. I know this is a different angle, but I'm just tired right now. Feeling really sleepy. But let's keep the energy up. Ankle socks, guys. That's no longer a thing apparently. So let's get into it. What does that have to do with mortgages? Absolutely nothing. But look, it is still interesting stuff we'll talk about in a moment. But guess what? Good news, team. Look at this. Like the green can, remember, green is good. We've had a good run this week. Why? I'll tell you why. So, by the way, if you'll notice for weeks, I mentioned, let's see, I say weeks, probably about 2 weeks now. See that black line? We finally broke above it and then finished above it, but then all of a sudden a convincing jump with that big old candle on the right. That's a wonderful, wonderful thing. So now we're above this purple line, which is the 100-day moving average. So if we can hang on, sit tight, stay above this purple line, that could be good things in the coming weeks and months for rates. Time will tell. We'll see what happens. But rates right now, they're back right at that 7. In theory, some are under 7. I saw some different articles, but we're going to stay consistent. Use Mortgage News Daily. It is 7% according to them, 7.02. And here's why, guys. CPI, that's a measure of inflation. Without going into all this, here's the big takeaway. So, core inflation, meaning strip out food and energy, but core inflation, it's at 3.62 with the CPI. This just got released, and that's why the big jump came, because it was a little bit of, it's a surprise, a little better than expected. But guess what this is what blew my mind. Shelter cost, which is 45% of that number. So it's a big number, but it was 2.51 of the 3.62. So 2.5 is just based on shelter alone. That's, like your house, that's lodging in terms of like hotel rooms, things like that. And motor vehicle insurance, that's 0.84. Year over year, motor vehicle insurance is up 22%. 22%. That means your car insurance is 22% more expensive this year. Those two things are literally making up the majority of the inflation that's showing right now, because everything else, strip out motor vehicle insurance, strip out shelter, everything else is 0.27. So for those that don't know, or as a reminder, the Fed is trying to get this inflation number under 2%. It's going to be really hard to do that if motor vehicle insurance and just the cost of housing and all that other stuff that they can't have a whole lot of control over, it's going to be hard to get that under 2% because everything else is basically 0.27. So to me, that blew me away that those two categories are basically making up all the inflation that's showing, and the reason why rates are going to probably stay higher for longer. So the inventory, I went to a builder thing. Well, some of these slides are here, but next week I'll have some really good slides, I think. But some of this is just to prove the point that what we've been saying. Home prices continue to go up. So for 9 months, this is the median home price of existing homes and how they've changed year over year. Look, you guys can see, with the exception of a few months in 2023, the rest of it's been positive, to where it's about, and I'm going to use just looking at, ballparking here, between 3 and 4% appreciation, which means housing's going to keep getting more and more and more expensive. So I do believe, we'll see if I'm right, I believe rates will start ticking down a little more substantially in the coming months, not because of what the Fed's going to do in terms of cutting their rates, but they're going to start buying back some, or it has to do with their balance sheet. I won't go into it because it's kind of boring, but I do think we'll see if I'm right. I think they'll get a little better, so I'm hopeful. Freddie Mac, saw this. Somebody asked me about it. I saw it, and then coincidentally, somebody asked me about it. But Freddie Mac is supposedly looking into buying second lien mortgages. I think the biggest reason why is because second liens, right now, nobody wants to touch their 3 and 4% interest rates they may have on their first. And so typically you got to go to like the smaller banks or things like that to get a second mortgage. Supposedly Freddie Mac wants to do this because, get this, guys, there is a record amount of 17 trillion. I didn't highlight it because I forgot. $17 trillion of home equity that is untapped in the United States. That is an all-time high. That is crazy. That is huge. That's amazing. So what Freddie Mac wants to do is offer a way to borrowers to go get that without having to refinance their first to go get that out, because again, credit card debt's at an all-time high. We'll see where it takes it. I haven't heard a lot of buzz, but I don't have an opinion outside of, I just think I wouldn't, but that's my opinion. The number of people buying homes in cash, getting back, I think we reported this a couple of weeks ago as well, but just, an update here, 34.5% of the market. That is, in the last decade plus, that's as high as it's been since 2013. So yes, that's due to rates being where they are. More people are paying cash, but I just thought that was really interesting. That's a cool graph. I hope you like it. Millennials did a thing a couple of weeks ago where I didn't believe it. But supposedly Austin is a great place. You'll see the little the thing there. The black houses here are under 25 years of age. So to me, I didn't know this, but apparently Utah, go Utah. I think it's 40% of all homeowners are younger than 25 years old, which is unbelievable to me. So good for you, Provo. Keep it up with those young people. I don't know if they're party animals, but who knows. But check it out. Literally the cities, there's 4, 5, looks like 5 on the map for people under the 25 years of age being homeowners. That's incredible to me. There you go. New construction. Again, this is part of what I went to this morning, and I just found it amazing. It's up 22% year over year and it makes sense because right now the inventory is tight. Builders are the only ones with inventory because sellers don't want to sell unless they can get like top dollar, and they got 3 and 4%. And the builders can put all kinds of incentives in front of their buyers to help buy down the rate. So good for them. 22% year over year. That's pretty impressive. And then this is a segment I'm calling the Who Knew. And I just got Bill Murray because I thought that was a funny looking, the man who knew too little. Who knew? So apparently in California, you can buy an entire town. Apparently there are 150 residents, 21 buildings. But if you have the money, you can go buy an entire town of Campo in San Diego County. So there you go. I didn't know that was a thing. Apparently you can go buy it. And maybe one of these people who live in these cities can go buy it, but Dallas, Fort Worth, and really just Dallas. Let's see, 1, 2, 3, 4, 5, 6. Dallas is apparently the 6th richest city as far as having the number of millionaires and billionaires. Apparently, there are 15 billionaires in Dallas. Houston squeaked out, beat us with 18 billionaires. I don't know who all the 15 are. I got a couple suspicion as to who, Mark Cuban, Jerry Jones. I get that, but there's apparently 12 other people here in Dallas that are billionaires. So good for them. I just thought this was a fun, interesting graph. A little nerdy. My wife knows that I look at that stuff. And then guys, I don't know why Colorado's getting picked on, but apparently it's the 3rd most dangerous state. What I thought was interesting is this the 3rd most, but yet the headline of the article said Colorado. It didn't pick on New Mexico or Louisiana. It just said Colorado. So Colorado, congratulations, Rocky Mountain High. It's just, Rocky crime high, apparently. So apparently burglary, larceny, motor vehicle theft, that's what makes them 3rd in the country. I did not know that. So there you go. Not trying to smear the brand of Colorado, but it's the 3rd dangerous. All right, let's have some fun. Lake Norman Mansion in Cornelius, 12 million. Guys, look at these pictures. I'm not going to lie. If I had 12 million bucks hanging around, this seems like a steal to me. 7,200 square feet, 5 bedrooms, 5 full baths on 1 point, call it an acre and a half. But look at this. That just looks beautiful. 12 mil. I just thought I'd show it off. This one, the HOA, I guess neighbors complained that this dude had his boat and they mandated that he put up a fence. So he had an artist come out and then basically paint his boat on the fence. So you can see the top part of the boat. That is the actual boat. And then the rest of the picture is just a painting of his boat. Kind of a jerk move, but you got to respect at least the fact that it's funny. And then let's see, Gen Zers. Apparently ankle socks are not cool. So if you're walking around public and you're seeing the socks that I wore back when I was probably in 4th or 5th grade, the high ones, apparently that's now the thing. And you are uncool if you wear ankle socks. I will continue to wear my ankle socks. Don't know why, just to have it. But I thought that was interesting. And then lastly, for the social media meme of the week, MLS description said, lovely outdoor kitchen. I don't know that that's real. I don't know where these came from. I mean, maybe AI generated it, but that's just not even real to me. So guys, as always, if you found value in this, little humor, whatever it is, forward, share, subscribe, all that fun stuff. If you need us, we'll be around. We appreciate you as always, and hope you have a great rest of your week.